Well, hello, friends, and welcome to another episode of the 360 Experience podcast. I'm your host, Tim Braheem. And today, my guest is a terrific loan originator, actually, the number 2 loan originator in the state of Georgia, Matt Kuglin. And he has quite a story. Matt's been in the mortgage business for 16 years. But for the first decade, he wasn't a traditional loan originator. He worked in a call center environment. And it wasn't until 2020 that he embarked upon the journey of becoming an originator that pursued referral partner relationships. Now, check this out. In just 6 years, Matt has over 100 real estate agents that send him business. He funded 303 loans in the calendar year of 2025 for over 150 million in production. And we're going to go into detail about his way of sourcing realtors, what he says to them, how he meets with them, and how he cultivates relationships with referral partners. We're going to talk about mindset. We're going to talk about his success in growing his business. This is going to be chock full of great content that you should be pulled over to the side of the road if you're listening in your car and be ready to take notes. Now, before we get to my conversation with Matt Kuglin, I just want to say thank you to our sponsor, the Loan Atlas. There's some great things happening in the Loan Atlas right now. If you don't know about the Loan Atlas, you need to check it out in the show notes below. Wow. A lot of AI integration that is really putting a prop motor behind loan originators' business. And we're seeing so much success and we're really proud of it. And then also our sponsor, Performance Experts Coaching, and the Leadership 360 coaching program, which is the only private coaching that I do. We are currently accepting applications. We only take 12 clients annually. Show notes in the link in the show notes can send you the application if you'd like to explore a little bit more about that. So without further ado, my friends, my conversation with Matt Kuglin in the 360 Experience podcast. Matt, what's happening, man? It's great to have you here.
Hey, happy to be here, Tim. I appreciate the invite. Excited about today.
You've been doing a slew of traveling over the last 60 days, haven't you?
Yes, I have. Yeah, I looked back and I left the country 4 times in 9 weeks.
Wow.
So it was a lot of airplane time. Luckily, the trip to Spain, we ended up getting upgraded to Delta One, which makes that flight a whole lot easier. But yeah, I'm excited to be back in Georgia and kind of a little bit more zoned in on work.
Right on. Well, congratulations on having a little bit of balance in your life and getting out there and doing some things. I know that when you were in Spain, you were at a wedding, and I'm sure that was a blast to be with friends and to be in another country and to enjoy that. And we share the same affinity for Italy. You and I have had a little offline chat about the fact that you actually lived there for a period of time when you were in school. And I just got back just a few days ago from having been there for a month. So maybe we'll see if the conversation goes there a little bit later on and speak a little Italian to each other. But let's get started with just a little bit about your history. I mean, I don't want to go terribly depthful into it, but I'd like to understand a little bit about how long you've been in the business for. I know that you started in a bit of a different environment than the one that you're in right now. So take us back to the beginning, kind of walk us through the present moment. We'd love to hear a little bit about your production numbers.
Yeah, absolutely. So I like the majority of people in the mortgage industry, I fell into it. I had a friend that was in my fraternity that graduated right before me and took a mortgage position in 2010. And then I graduated in 2011. I knew I wanted to be in sales, and I always had this vision, even though at that point I didn't play golf, that I would, be in sales and take clients out to, on the golf course, which has come to fruition now. But I was interviewing for 4 different sales positions, totally different industries. And there was a lead-based mortgage company, American Equity Mortgage. They had a beautiful office in the Cobb Galleria. And I'm fresh out of college, and they're offering me this corner office. Who knows how old I was, probably 21 years old. New rates were low at that stage. It was just after the crash. A lot of people were refinancing, and I liked numbers. Thought it would be good for my resume to have, the state and federal, licenses on there for future jobs. And I just remember I was very hungry at that stage. I had, probably $500 in my account, and felt like my back was against the wall, which is how I've felt my entire career. I still feel that way when I wake up this morning. But just, beat the phones and tried to learn as much as I could, tried to pass those exams as quickly as possible. Ended up rookie of the year, my first year. made over $100,000, which was big back then, and stayed in kind of a lead oriented platform. I left American Equity with the senior vice president of that company who was starting a refinance sector for another direct lender locally. And he brought like 8 of what he felt like were top producers from different organizations. We started that refinance sector. I ended up moving into management there, had the title of assistant vice president and was managing 25 plus loan officers, had a marketing budget of over 120 grand a month. And then my wife got pregnant and I was spending a ton of time. And of course, on the call center environment, you've really got to be in the office. And I was spending 60 plus hours in the office. And I looked at my wife. I said, I'm not gonna miss my daughter growing up because I'm stuck in this office. I'm gonna, try to go and flip over to the other side of the mortgage business and go more towards realtor and or builder relationships, and got connected with the company that I'm with now in 2020. And I'll never forget, Tim. So it was, I was in the office that I'm in now, preferred lender, and I walk into the office. I'm getting all my stuff situated, and the team leader of Keller Williams walks in within an hour and a half and says, Matt, I'm sorry. Like, this pandemic stuff is going crazy. They're forcing everyone to leave and go home. We don't know when we're going to open back up. And I just quit my other job where I had a salary and bonus and all this stuff. And I remember on the ride home calling my wife saying, we need to get all of our expenses down. Like, I don't know how much money I'm going to be making. This pandemic is extremely frightening. I'm calling the insurance company from my house, trying to get my premiums dropped. And then we know what happened in 2020. Rates dropped, and it was very fruitful. So, I've been on the quote unquote retail side, working with primarily, realtors since 2020. It's been a wild, fantastic ride. This side of the business is definitely more oriented and aligns with my personality and just kind of how I work. I'm not somebody who really needs to be sitting in an office on their computer and right next to a phone all day. I'm happiest, out and about and meeting people, lunches, coffees, golf, going to events. So it was a blessing that I, kind of took that leap of faith and said, hey, this is what I'm going to do, and I'm going to make it work. And it has.
I've got a lot more to ask you based upon what you just shared, and some things to also take an opportunity to teach on here in a few minutes. But before I get there, presently, we're in 2026 and 2025. What was your volume and units, just so we have a perspective on that? And how many realtors do you have that refer business to you, given the fact that you've only been at that aspect of the business for about 6 years now?
Yeah. So we did 303 units in 2025. Total volume was 150,333,000. We've talked about this before, Tim, and you asked me, you said, how many realtor, referring agents do you have? And really, I should know that number. I don't. I know that I would say probably over 100 realtors are sending business, and I'm on the list, whether I'm number 1 or number 5 on the referral partner list, but over 100, and I always want that number to continue to grow. And I think that's something that's I can point to in terms of success. Is I think a lot of people, at least from what I've seen, is they get to a spot where if their income threshold is closing 30 million in loan volume, they get to that mark and then they sit back and they think, okay, I'm just going to try to maintain. In my opinion, and what I've experienced, is you just never know what's going to happen. You've got realtors that they end up retiring, or they've got to move closer to family in Florida and, start doing the majority of their business out of a state where it's more difficult to stay in touch with them. So I've just always tried to continue to look for people that really, most importantly, I want to work with, and it's a good working relationship. And that's something we may want to talk about as well, as if it's not a good fit, whether I'm not a good fit for them and how they do business or vice versa, I'm very quick to cut bait. I just really want to continue to expand my referral partners with people that are like-minded, have the same, hobbies or interests, and then also respect me the same way that I respect them in their time. And I think really zoning into that over the last couple of years is what's helped expand my team's volume.
So I definitely want to get into the mechanics of how you cultivate referral partner relationships, what your litmus test is around, cutting bait, and, who is a good fit for you, and how do you go about capturing their attention, establishing a relationship, earning trust, building continuity, et cetera. We're going to get there for the listeners' benefit for sure. But I want to also just kind of make note of a couple of things that you said, and then take you back to the beginning again, back in 2010, and ask you a question relating to that. So the first thing I want to share for the listener to really take note of is when I asked Matt what his units and dollar volume were, he knew those numbers specifically. 303 units and then 150 million and change. And he gave me the specific number. Successful loan originators track their numbers. They know, they create a competitive environment within themselves. They gamify the experience. They set goals and establish thresholds that they're seeking to continually strive for. And I can already tell from our conversation that that's in the fabric of who you are. Additionally, I want to make a comment for the listener to really digest, which is Matt started in a call center environment. Now, I am not suggesting that everybody that's listening to this episode should just quit their job and go work for a call center. But what I am suggesting is that there's something very interesting that has developed over the course of me hosting this show over the last 3.5 years. I've been fortunate enough to interview some spectacular producers, everybody from Craig Strent to Ryan Grant to Sam Rosenblatt to Shant Banasian, the number one lender in the country. And then myself fall into this category. All 5 of those people, and now 6 with Matt, started in call center environments. And as a result of starting in a call center environment, you get a lot of at-bats. There's a lot of sales opportunities. And great habits and mastery of this profession it's rooted in frequency, not time. I remember as an originator early in my career when I was very young and I'd be talking to a real estate agent who was, 15 years older than me, and he or she would ask me, like, why should I work with you? I would be able to confidently say, because I have more experience than just about any loan originator you're ever going to talk to. And they'd look at me like I was crazy because I was 28 years old, but I was in a call center environment. So I got an opportunity to talk to a lot of people, and I heard every objection that could be thrown at me. And I figured out from trial and error how to overcome those objections. There are only so many of them to overcome. And I mastered and perfected my presentation skills. So let's go. I'm going to give you 2 questions now, Matt, that go back to the beginning of your career. The one is, to the extent that you would like to comment on what I just shared and what being in that call center environment did to your level of confidence in yourself and your ability to be able to be quick in your ability to counter objections. I'd love for you to share about that. And the second thing that I'd like you to share about was that it struck me that when you first started, you got that corner office, we have a lot in common, bro. Like, it's pretty interesting. I mean, I also was referred into the business by a dear friend of mine who is my fraternity brother and my big brother in the fraternity. So that's how I got into. And then I also had a corner office in the second company that I worked for. And I remember coming in with my briefcase and my my $149 suit that I was wearing and all of that, and feeling really proud of myself at 26, 27 years old. But there's something that happened. There's some fire in you that propelled you to being great early. And what I'm wondering is if you could identify what the purpose was, what the drive was in those early days of being a loan originator that had you making $100,000 in your first year in the business. So that plus the call center environment, tackle them both and go for it, man.
Yeah. I think first, I'm going to answer your second question first, and then we'll loop back to the first part of it. But from a drive perspective, I'll never forget when you said briefcase and your $149 suit. I had
Men's Warehouse, bro. Men's Warehouse. I was a regular there.
I said I had $500 in my bank account. Well, I actually had $1,600. And as soon as I got in the position, I went to Joseph A. Banks, and they had buy 3 suits, buy 1 suit, you get 2 suits free, and then 2 button downs. And then, so I used $1,000 to buy 3, the cheapest suits you've probably ever seen in your life, and thought I was big time. So I think from how I was successful in the beginning is One, my financially, my back was against the wall, and I think there's something to say about that. And not everyone is going to be in that position, but I had no choice but to figure out how to pay my rent quickly and try to get some money into the bank. And I don't want to act like I'm, came from a family that had absolutely no money, but I was never really given money from my family, and it wasn't a thing to ask. So just really felt financially back against the wall. Also I walked on at a Division II basketball school, or a Division II school for basketball. I think just athletic background, that competitive nature of just wanting to. Now I've moved out of school. I'm not necessarily playing sports competitively. It shifted over into kind of a financial thought process. So I do think that, being in sports and doing that somewhat at a high level had a very big impact on the drive. To circle back to your first portion of your question. So I align with you 100%. I've said this so many times. Call center environment allowed for me to get so many at-bats and talk to so many people to where feeling that rejection, you're almost numb to it. It's just like, hey, that one didn't work out. What I was very good at is kind of looking back. If I didn't close somebody or the conversation didn't go well, instead of projecting out and, thinking, oh, this guy was an a-hole, or, he didn't know what he was doing, I would always look in the mirror and figure out, what did I do in that conversation that I could have done better? And I think that's something that a lot of people, not just in the mortgage industry and sales, need to work on. Is we can always get better. And that's all we can control, is what we're doing. And if you're not analyzing your scripts, how you're responding to objections and trying to get better, I still do it to this day. When I lose a deal, I think, what could I have done different? And just having so many at-bats, I think that helped with no longer a fear of rejection, and then also just being smoother in terms of transitions. You had a second part to that question with the call center. Can you remind me of that one, Tim? It was.
Well, I mean, being in an environment like that accelerates you through the learning curve, right? Like, I mean, if we use the baseball metaphor, your batting average is your conversion ratio. It's how you present yourself, how you establish authority, how you counter objections, how you remove fear and uncertainty from the person that you're selling to. But if you're only getting, if you're sitting at the end of the bench and you're pinch hitting twice a week, I mean, you're not going to become as good of a hitter as if you're the leadoff hitter and gets, the most at bats on the team. I mean, and marketing is what generates the at bats. So what I was wanting you to just comment on was like, the velocity with which you got better, because of that exposure on a consistent basis. There's so many originators out there who just don't get enough at bats right now. And if you have any advice for them as it relates to how to put themselves in selling opportunities as frequently as possible, like if you were starting, maybe this is a good question. If you were starting over right now, where would you start? Like what would you do to make sure that, with your wisdom that you currently have, what would you do and what would you suggest to a new originator?
Yeah, if you're outside of the call center environment, if you're in the call center environment, it's picking up the phone as much as you possibly can, right? That's your marketing, is getting those leads. If you're going after realtor business or builder business, I think what's most important is kind of circling back to finding people that you're going to mesh well with and going after those people in terms of being like-minded, same hobbies. In the beginning, I will say that I had to take on and reach out to agents that weren't doing as much volume, and then also may not have aligned, with my hobbies and my interests as much. But those relationships, that's part of what I learned, is those relationships fizzled out pretty quickly. So I think trying to cast as wide of a net, while then also going after the agents that like to go play golf, or if you're a tennis player, like to go play tennis or pickleball, taking the time to do the research. How I was successful is I realized, social media, it's a beautiful thing in sales. Being able to have people who are posting what they're doing and what they like to do. Before social media, no one had access to this type of stuff. It was word of mouth. It was if you ran into them. In utilizing social media to be able to, I use the word stalk. I know that seems kind of harsh, but it is. It's stalking. It's finding out where they're going to be, what they like to do, and then going after and attacking it that way. And Tim, we had talked before. I've always tried to get people that I want to work with, find out who they know that I know, to make it a warm introduction. And I know that's not something that, is new to sales, but it's so important. Having somebody start a group text, hey, I know Matt well. We were talking about you. I'd love to just connect you. The chances of you getting a response and being able to set up an initial coffee or lunch or whatever the case is increases by, I'd go as far as saying 80%. So, the advice that I would give people is utilize every resource that you can to find out who you're trying to work with and know about their life, what they like to do, and make sure you feel like that it would be a good fit. There's no point in wasting everyone's time and you going to grab coffee with a potential agent if you guys aren't going to mesh well, right? It's literally a waste of time. So I feel like, going that route, you increase your percentages on conversion. And it's got a much higher percentage chance of it being a long lasting partnership between you and that referral partner.
So let me distill this down and summarize, and then add another example of this based upon my autobiographical experience. So what I'm hearing Matt say, everyone, is that he learned pretty early. And again, remember, he's only been going after real estate agents for 6 years, and he has a ton of them. And I want to get into more detail on that in a second. But what he learned very early on was that if he's focusing on solely their production numbers and not who they are as a human being and whether there are common denominators, that he's really looking at the wrong metrics, right? If what we're going for here is a relationship, there has to be a foundation for a relationship to even happen. And that comes from there being commonality, similar philosophy, and that makes the job that much more enjoyable. And then what he's doing is that he's doing his homework. He's not being lazy about it. He's professionally stalking them on social media, understanding where they hang out, what their hobbies are, et cetera. And then he's utilizing his network. If he finds a common person that he knows, that he could, call the person up. I presume you call the person up, like if it's a past client of yours and they know this CPA or this real estate agent, you call the past client up. You say, hey, I noticed that you are connected with so-and-so on Facebook or LinkedIn or whatever it is. Tell me a little bit about that person. I've always been interested in meeting them. And then after they describe the nature of their relationship with that person, hey, would you mind making the introduction? It's a simple question. If you have a relationship with the person that you're asking of it of, and have done, a good job for them and been an ally, they're going to be more than happy to help you out. Let's not make this job so difficult. So another example of that is I used to, as an originator, Matt, and I'm wondering if you've ever tried this, and if not, you're welcome to swipe and adapt it. But I used to ask, when I would be done consulting with the client, I would then take them through what I called my page 5 questions. And that was something that was taught to me a long time ago by a guy named Joel Epstein, who said, hey, how many pages are there to the standard loan application? Everybody said 4. He said, actually, there should be a 5th page. And that 5th page should ask the questions that you wish the application asked, but that you never get around to asking. And so I kind of ran with that concept, and I developed these 1 to 5 questions. So, Matt, rate for me on a scale of 1 to 10 your existing relationship with your CPA. Mate, rate for me on a scale of 1 to 10 your existing relationship with your financial advisor, et cetera. If you gave me a 6 or a 7, that's my open door to saying, wow, tell me more about why this isn't a fulfilling relationship for you. They share with me the dissatisfaction that they have with this person. And then I have an opportunity to then go in and say, hey, I'd like to introduce you to somebody who's absolutely phenomenal as a certified financial planner and somebody I've worked with for a long time. I'm certain that they would be willing to consult with you for 45 minutes or so and not charge you for their time due to the nature of the relationship with me. I think it'd be valuable for you to have a second opinion. Would you mind if I make that introduction? Boom, now I'm making an outbound referral. Secondarily, if they gave that person a 9 or a 10, then now I've got my opening. I'm saying, wow, a 10, I don't get those very often. As I'm sure you could imagine, I am always interested in meeting people in financial services that are outstanding at what they do. Do you think it would be a good idea if I picked up the phone and introduced myself to your accountant, Richard Blythe, in an effort to establish a relationship with him and maybe have a cup of coffee with him and talk a little bit about how we can help each other? Again, simple question. Very infrequently would the person say no. almost 100% of the time they would say, yeah, sure, that's a good idea. Now I've got my in. I call Richard and I say, hey, Richard, my name's Tim Braheem with First Rate Financial, and we have a mutual client by the name of Matt Kuglin. And Matt and I were just talking. By the way, he raves about you. He said that I asked him to rate you on a scale of 1 to 10. He gave you a 10. And he thought it would be a good idea that we get together for a cup of coffee and get to know each other a little bit better. How would you feel about that? Now, point being, for both the scenario I just gave and the scenario that you gave, is that it's very difficult for that other person to say no, because they're saying no to the person that made the introduction. So when you have that third party reference from the LinkedIn account that says, hey, I'm setting up a group text, want to introduce you to Matt Kuglin. We were just talking about you, Matt meet, Tim meet Matt. I can't really blow you off, because if I blow you off and ghost you, I look bad in the eyes of the person who made the introduction. So you kind of trap them into having to interact with you. Share more if you have anything more to say about that.
Yeah, no, it's psychology 101. You're getting an introduction, and they feel obligated because right now that's a client of theirs, and it's also it's a warm setup on your side. I've not utilized that for financial advisors or CPAs, and I'm going to snag that one from you because you gave me permission.
Yeah, of course. Casey Granston, who's going to be speaking at Mastermind Summit just as you are at Bellagio in June. I remember he texted me one day and he said, this is like shooting fish in a barrel. And I didn't know what the hell he was talking about. And I texted him back and I said, what is? He said, this 1 to 10 rating script. He goes, I've gotten 5 appointments with financial advisors and CPAs in the last 2 weeks by just using it. It's like the easiest thing in the world to getting an introduction. And then from there, you got to go and do a good job of presenting yourself. So let's go back to the issue of, I don't want to skirt over, and we'll come back to realtors in a minute. But I want to go back to the issue of, that competitive drive, the basketball player in you that then became a loan originator. Do you create any competition within yourself to ignite that drive? Is there anything that you do to create leverage? Do you gamify or create a competitive commitment with yourself to bring out the best in yourself?
So early on, I set a goal, and this was early in the business, is that I never wanted to make less money. And it's not all about money, but just from a goal perspective, you could transfer that over to just overall loan volume and closings. I always wanted to produce and close more than the year before. And I've done that since 2011. So I think when you're in sales and you're trying to continue to increase volume, especially with how stressful this business is, you have to gamify. You're competing against yourself. Sometimes I'll figure out, like this, in 2025, I was the number 2 originator in the state of Georgia. And there's been a number 1 guy who's, I think from the beginning of time, his dad apparently was in the business. He took over that book, and really, really sharp guy who's done well. But I shift over in a healthy, hopefully in a healthy way. I try to compete, and it's, hey, I've gotten up to this spot. Now I'm going to try to come to number 1, and there's a pretty big gap between those numbers. But I think if you're not analyzing and trying to find a competitive edge or something to push you, it's very easy to feel defeated. This business, you've been in it. The amount of times where you think you've got a deal and client ends up shopping you 2 weeks into the process and flips over after you spent hours and hours. It's a very easy business to feel defeated. And I think that's why a lot of people have gotten out of the business here in the last couple of years, is when it's not easy, you see who really has a why and who's really driven. And I think that's when so much of the market share is grabbed. And that's for my team, as rates were jumping up, I think at one point they were at 7.25 or 7.375 national average, coming off of the pandemic where we were handing out 2.5% interest rates. I looked at my team and I said, guys, this is not going to be easy, but if we keep our head down and we do what we're supposed to be doing and execute, doing the coffees, lunches, reaching out, events, helping, sponsor, showing up to real estate offices and speaking, doing classes, eventually we are going to gain market share for people who are worn out and, don't have the refinance business anymore. They're going to get exhausted, and eventually this is going to get easier. And that's exactly what happened.
Okay. So let's tackle that for a minute. What is a week? Okay. Let's go back to when things got tough, 2023, 2024, rates spiked way high off the lows of 21 and 22. And you got together with your team, you guys put your head down. What were some of the non-negotiable daily disciplines that you executed on to ensure that you could still have a better year than the year before, which is really remarkable given what happened to the market?
Yeah, I think first and foremost, I think the most important thing was we have always had a target list that gets updated. Sometimes it doesn't get updated for a month. Sometimes it's updated week over week, but basically doing the research as to who we're wanting to do business with and who we're targeting. Again, as it felt like every phone call that we were making to the agents that we already worked with of just check-ins of, hey, how's business? How are things going? The agents weren't getting, they were just as frustrated. They didn't have as much business coming in. I wanted us to continue to focus on hitting our target list and keeping, trying to go after new relationships and adding referral partners to the list. And I feel like that was the most important thing. I knew that loan officers were getting exhausted. They're thinking, okay, well, we'll wait for rates to come down and then we'll start reaching out. They kind of went into hibernation. A lot of loan officers went into hibernation and kind of woe is me mode. And I thought now is the time for us to, these loan officers are not keeping up with their referral partners, now's the time for us to get in there, schedule the lunches, schedule the coffee. So that was main focal point, was just continuing to reach out and trying to slide in. And what happened, and this is what was interesting, is probably 2023, it was about a year after rates had really spiked. So many of the loan officers, and when I make phone calls and I reach out to somebody, I'm very respectful. If they've got a loan officer that's been crushing it for them for 15 years and never messed up a deal and does, X, Y, and Z perfect, I don't press to try to squeeze in there. I say, hey, that's fantastic. I love to hear that. That's what I want my referral partners to say about me. If your loan officer ever retires or starts moving into a part-time status or does start fumbling the ball, that's where I'd love to just get on the list and show you what I can do. And I'm telling you, so many agents that I'd had that conversation with that I was not on their list, the loan officers started retiring. And my random follow-up, or they would just call me, hey, Tim finally retired. I would like to have that coffee now and just, so you can remind me as to what you guys do, what the company that you work for specializes in and what you feel like you're good at. And then I started capitalizing as people were exiting the business or just not following up with their realtors.
So I know a lot of originators who share with me that, they've got their target list of real estate agents and they call them and they leave messages and they text them and they send them a personal video and they just keep getting ghosted. Do you have that experience and how do you overcome it? Like, how did you get these agents to even take your call? Or was it easier back then because nobody was busy? I mean, how do you get people to actually engage with you?
Well, so I'm not a big follow-up person. And I was just talking to an agent of mine that was in the office before we got on this call. There's an insurance agent who she is phenomenal at follow-up. And I mean, just reaches out to me. She does video, text, call. How can I help? Just really, really good at that follow-up. That's not really my angle when I'm trying to get someone's business. Of course, I'll reach out. What I try to do is get in front of somebody before I'm even asking to set an appointment. So meet them in person somehow prior to trying to schedule coffee and sometimes there's a layup, right? And you've got a listing agent and my team reaches out to the listing agents every week to give them updates. And then eventually they say, man, this is fantastic. I've never had a lender do this before. Would love to grab coffee. That's a layup where we haven't met before. But normally I wait until, I try to go to the majority of my closings if it's within reason, distance wise, geographically. But wait until I meet a listing agent at a closing, see if the personalities are a fit. and then follow up, try to exchange numbers at that point in person, and then follow up from there. So I'm not a huge, like take a list and call and text and send video messages. I'm sure that that works. And I'm sure a lot of people have made a lot of money on it. I know my personality type, and that's boring to me. I'd rather figure out a way to find out what event someone's going to be at and organically meet them, and then try to take it from there. So that's been my strategy.
Yeah, I don't think it does work. That's the point. Is like, again, that's like, why would I think that everybody always, always when I'm coaching somebody, I always say, let's slow this down for a minute and let's put ourselves in the shoes of the other. Okay. So if you were being hit on by, 12 different account executives, for various lenders all the time, they're constantly texting you and video, shooting you videos. Like, what, like, are you going to respond to them? I mean, are you just going to be like, look, I'm too busy? I mean, you're going to be too busy. I mean, if you're any good, you got plenty of other things to do other than respond to some cold text message or voicemail that was left for you by a loan originator if you're a real estate agent. So I think that why you're successful is because you're not doing that. And what you're doing is you're putting yourself belly to belly in front of them first and then following up with them after. So it's a warmer engagement. So other than the closing table, what other places do you go hang out, if you will, that get you that belly to belly introduction? Do you go on Caravan? Do you, what do you do to get in front of these people?
Yeah. I mean, for beginning stages of my career, I would do open house. I'd say, hey, if you got an open house over the weekend and need somebody to be there, and I'll put a preferred lender and send, do that type stuff. So now at this stage of my career, I try to, I shouldn't say enjoy my weekends, but zone in on, I've got a 1-year-old and a, 5-year-old daughter. Try to, I still work, but utilize that time more for family. But in the beginning, I knew that I needed to step out and do that stuff, and knew that agents would be coming through, that it was an opportunity to meet them. There's a ton of networking events in every city in the country that primarily realtors are going to, or builders. So I was heavily involved. If I felt like, hey, this is an event that's close by, and looking through photos, there's been agents that I know of that I've seen on social media, this looks like a good one to go to, I'd go to a networking event. So I'd say those are probably the two main. I also, there's a lot of real estate brokerages in a very condensed area here in Atlanta, and knowing the decision makers and the people who are leading the brokerages, if you can get in with them and start having some influence there, it's much easier to get introduced to people. If you're, let's just say it's a team lead of a Keller Williams office, and you've got the managing broker, and you're able to get to the top and then work down from there. I was also very successful in that. So did that answer your question?
Yeah, for sure. I mean, it's a full contact sport, right?
Yeah.
I mean, you got to get out of the cave and hunt. And that's what I'm hearing that you're doing. So you mentioned earlier that, you're on, you have roughly 100 real estate agents. You don't know the exact number you're on their list, and you may be number one, or you may be number 5, which is an interesting philosophy that I want to take a look at, because I also know that one of the key objections that a good real estate agent will have is, I already have an existing relationship with a lender, or I give out 3 business cards, or whatever the excuse is. It's just a way to deflect, right? So you don't have to have the engagement. What's your philosophy on that, about being the number 2 or the number 3 on their list? And how has that worked for you?
I just want on the list, and what I communicate is, as long as I'm not so far down on the list that they're not going to reach out, I'm happy. I feel like that if I'm number 3 and they say, hey, I tell them to call every single person that's on those, as long as I get in touch with them, I have to feel confident enough that I can beat out anyone else. And I do. So for me, it's getting to a spot to where I'm actually just receiving that phone call, even if I'm last on the list. And normally I think they say it's like the first lender that clients talk to, it's like 70% success ratio, right? Mm-hmm. I'm okay with having a 30% chance, and I'm confident enough in my ability to be able to convert and at least make it really, I think this would be important to talk about. I try to get, especially early on in my career, I said, give me the deals that another lender can't figure out. Even if you think this deal is dead, let me look at it. And I didn't close every single one of them. I got, figured out ways to make a deal work on a few of them. But what it gave me the opportunity to do was show the agent how I communicate, my communication skills, and have a client give feedback as to how it was working with me versus their number one guy that may have been with a bank and couldn't get it done. So I'm always just trying to get in the situation where I'm communicating back and forth through the transaction, or even if it's just trying to get a client pre-approved, because I feel like that's where I shine and they get to see how I actually work. Now, if you
That's
suck,
really, yeah, no, that's a really great point. That's a really great point.
If you suck at that, which you can't in this business, you're SOL. But that's where you've got to make sure, and every loan officer has to realize that 75% of this business is communicating quickly and effectively. If you're not responding to stuff for 5-6 hours, and this is one thing that I've never aligned with. I know some people have better boundaries, but it's like they'll my agents know on this day and this day and this day I'm completely inaccessible. My agents know, hey, you may have to text me instead of call me during this time period because I've got a meeting. But I want my agents to get the information they need as fast as possible, because that makes their life easier. They can make decisions quick. They can go out and get the next deal, which means in return, hopefully I'm going to get another loan. So I think people realizing how important speed is, in communication. And I think a lot of people may have better systems set up. For me, the majority of my business runs through my cell phone, and I prefer it that way. But just making sure that you're responding in a quick manner. And, again, if you got another lender who's fat and happy and they respond whenever they feel like it or aren't as hungry, realtors are going to realize that, and they want to work with somebody who's willing to grind.
One of the things that I heard you say earlier too, that I want to comment on in my looking down at my notes here, is that the philosophy that you adopted early in your career when you were in the call center environment and you were unsuccessful in converting a lead, you didn't look at it as a failure. And I think that that's a really important thing, is that you have to have a little bit of thick skin and an adjustment to your viewpoint on how you experience things. So you just said it in a different way, which is what triggered it. You said it as it related to, I'm the number 3 guy and I'm working through the ability to try to qualify this person, or the turn down that they couldn't get done with their primary lender. And even though maybe you don't end up getting the loan because the loan's not doable, you're not viewing that as a failure or a waste of your time. Just as in the call center environment, you weren't viewing a lead that you weren't able to convert as a failure. You were looking at both sets of circumstances as an opportunity to learn. In the case of the call center, like, okay, now I know how to work with somebody who has that same objection in the future. And in the case of the loan that you're trying to structure that maybe the primary lender couldn't get done, you're viewing that as a positive, which is, at least I got to interact with this agent and they got an opportunity to experience me. And this is something that I really want to hammer home and cement for the listener, is that what goes on between our ears and the way that we process the experience is everything. If you're looking at it as a failure, then okay, you can walk around having feel like you failed. Or if you're looking as, hey, I'm really glad that I encountered that borrower because it gave me an opportunity to talk to Mary finally and have her experience a little bit about the service and the speed, my professionalism. That's a totally different juxtaposed perspective. And I think that has everything to do with what keeps propelling you forward and having you have better years, year after years, because you're consistently looking at it through a lens of optimism and opportunity rather than a lens of defeat. So let's talk about a topic that you kind of brushed on briefly, maybe about 20 minutes ago. And I'm going to frame this up, and I want to ask you what you do about the situation where, you've been working with this person for 2 months, you got them fully approved, they're a cash buyer, they're looking for property, and then, they find property, and then they start rate shopping you after you've done all of this work for them. How often do you experience that? And is there anything that you're doing to prevent that occurrence? Because I know that a lot of loan originators are having that experience right now. In fact, somebody that I'm coaching later on today lost 2 deals last week, and we'll be talking about this exact topic in our coaching session today about how to make sure that that never happens again. I'm curious if you have any comments on that.
Man, doing this for 15 years, I've never experienced the shopping. And I think a lot of it is just how quickly people using ChatGPT to ask advice, and, ChatGPT saying, hey, speak to a couple lenders, or if it's just so the ease of shopping has gotten easier, for lack of better words. I mean, it's just, you can go online and look at 4 different lenders, on Google, and whether it's a legitimate rate or not, they're able to pull up that information in 2 seconds. So I assume every client, whether they tell me they're going to be shopping or not, is shopping. I don't necessarily have some magical script to where, to stop it from happening. I think what I do is I take a ton of time on the initial call, at least 20 minutes, and I'm getting very in depth. I don't take manual applications, but I just run through, finances, and just the way my brain works. I can remember the majority of what I hear. So I keep people on the phone for as long as possible in the initial call. And I try to wow them as much as possible in terms of any questions they've got throughout the process. I want them to reach out to me when they have a house that's in mind to run through quick numbers. And I bank on clients having to feel the guilt of going with another lender after the amount of time, energy, and effort I've spent with them, along with trying to connect with them outside of just numbers. So I think it's really important. Here's something that people could take from me. There was a woman that I worked with. We were never on the same team, but she said to me one time, she said, how I get away from just the numbers is I ask on that initial call, what do you do for fun? And it's the last question that she asks clients. And then you can just tell even people who are CPAs or engineers, or, not really trying to get into the fluff or have kind of an emotional conversation, the tone changes. And I started doing it, and it felt weird initially, but all of a sudden you got somebody who's talking, all they want to do is talk about numbers. What's your rate? What's your cost? Send me a breakdown and I'll look it over. You let them start getting into their life and stop. And that's where you can't just ask that question and then move on. You've got to get them talking about, what their favorite thing is to do, make note of it and bring it up in future conversations. But it's stuff like that where if you actually have, create a connection with a client, and you do a good job and you respond and you're available, there's times where I've won deals and I've been $3,000 more expensive at the same interest rate. And of course, there's people who you have no idea that they're going to shop you, and there's nothing you could have done to keep that particular loan. But I feel like that I win a substantial amount of more deals by going that route and treating every client, knowing they're probably eventually going to talk to another lender, but giving them everything that I have and trying to create that connection. So that's how I've gone about it. And again, I'm just like everybody else. I lose a couple deals a month due to a rate shopper. But I think if you're genuinely connecting with clients and you are giving them a high level of service, as long as you're within the ballpark, you should be able to win the majority of those deals.
So I'm going to run a couple of scenarios by you, and I'm going to be very curious to get your take on them. One of them is mine, and another one is a client of mine named Edgardo Ballantyne. And it's on this particular topic on rate shopping. So first and foremost, let me establish a couple of things to strongly validate everything that you just said. It is paramount that you are a terrific educator and that you take the time and you have a system for educating a client that has them wiser and more informed about their financial decisions than they were before they ever spoke to you. I mean, that's a given. That's a prerequisite and a requirement. Secondly, it's critically important that you find common denominators and connect with them on a human level, as you just said, by asking them, like, what do you do for fun? And the next thing, it's like you and I, bro. I mean, like, we're just getting to know each other, but we already know a lot of little things about Florence and golf and this and that. I mean, like, that's what bonds people together, is when they have things that are in common. And you should be doing that with every one of your clients and every one of your prospective referral partners. When you meet with a realtor for the first time, it should be 50% about that and nothing about business, just so there's an established connection. And with that said, I do think that I know from my own personal experience and from the experience of several of my clients who've implemented this, that there is a way to be properly scripted and preempt the rate shopping. And I think you're absolutely correct that presuming that they're going to rate shop is probably a good idea. So the way that I used to do it was this. After I'm done adding a ton of value, after I'm done connecting with them at a deep level and finding common denominators and having there be a likability factor between the two of us, I would then say to the person when they made the commitment that, yeah, I'd like to move forward and get, I'd say to the person after education, are there any further questions you have? No, nothing at all. The next step for you, whether it be working with myself and my team or working with somebody else that does what I do for a living, is for you to become a cash buyer, which that's what I advise you to do. I strongly suggest that you get fully approved without conditions, subject only to the property and a contract. And I want to encourage you to move forward with that. And they'd say, well, I want to move forward with you. And I'd say, okay, no problem. But let me make sure that we have an understanding. I don't know if you realize this, but unlike attorneys, unlike CPAs, unlike financial advisors, my profession is such that my team and I don't get paid until your loan closes. So everything that we've done thus far is gratis and it's on me. But now we're at the point where I really have to put my team to work and I have to pay them. And I have a commitment and agreement with them as their leader that I'm not going to make them work on a bunch of stuff that they don't get paid for. So if you're comfortable moving forward, we will do a great job of getting you completely approved and putting you in an enviable negotiating position on your contract as a cash buyer. I just need to make sure that you've done all your rate shopping and you're fully committed to working with us. And if you are, then let's move forward. Now, almost 100% of the time, because I did a great job in the consulting and in the bonding, they'd be like, yeah, no, I want to move forward with you. Okay. And then we would go into the next phase of the process, get them fully approved, et cetera. Occasionally, I'd get that phone call. Not often, because I've created finality in their mind. Okay. Now they have removed from their thought process that I'm still shopping. I made it clear in that scripting that, like, the shopping's done if you want to move forward with us. And, let me know, do you still need to shop? Because if you do, no problem. And I'll just stay in touch with you and not deploy my team just yet. Okay. Occasionally I get the phone call 3 weeks from now when they identified a property and say, hey, I was talking to this other lender that's 1/8% lower than you. And I'm just wondering if you could match it or, whatever. And I'd be like, wow, like I'm really surprised that we're having this conversation. I mean, I thought that we had talked about this 3 weeks ago and that you told me before I put my team to work that you were fully committed to working with us. And then they'd start backpedaling because they feel like shit. And be like, oh, well, no. I mean, I just want to get the best deal for me and my family. No, I totally get it. And as we had discussed a few weeks ago, the time to look for the quote unquote best deal for you and your family was, 3 weeks ago. And I'd push back, right? And then they'd fold. 9 out of 10 people just fold and go, okay, yeah, let's just move forward. And I'd reiterate and remind them that I'm going to be managing the liability side of the balance sheet. I'm going to be proactively looking for cheaper money for you and refinancing you whenever there are opportunities. I'm going to be a resource to you and a conduit to other financial services, all of the things that I had shared with them in the initial dialogue. Okay. And I would lose very few people. But here's one other script, and this is not mine. This is Edgardo's, which I love in combination with what I just shared. So what he says is, okay, so we're talking about 1/8% better in the interest rate, which after tax is $27 a month or a little bit more than $300 a year. So if I match it, will you then go with me? And they would say, yes, 100% of the time. Yes. And then he would say, why? Why would you go with me if I had the same rate as this other person? And then they would give him all the reasons why. Well, I really liked your follow-up. I liked the way that you taught me. I like the fact that you have a team. You guys have been really respectful. You guys have been on top of it. Okay, so what you're saying is that all of those things, all of those extra things that you like aren't worth $300 a year? like, I mean, is it like really that much money compared to all the value? Because he made them share with him the
Yeah.
perception of the value that they see and then compared it to a very small amount of money. So let me see if you have any comment on either one of those things. And actually, the last thing I'll say is this, is I think a lot of people are afraid to deliver my script because they're worried about hearing the answer. They're worried about hearing, well, no, I'm not fully committed to you yet. Wouldn't you want to know that now? And when you want to be able to then pivot to continually adding more value to them as the consultative salesperson that you are, rather than pushing them over to your team, you've now gone on to your next deal. You think you have them, you don't really have them. Then you got to deal with the grind conversation 3 weeks from now. That's one that really sucks the energy out of you and makes you feel defeated. Like, I'd rather know now so I can continue to try to work on converting them. What are your thoughts on all of that?
No, I love it. I love it. And I'm with you. I think, a lot of loan officers are scared to hear that they're not going to be the only. I mean, it's almost like you're trying to date somebody and you find out that, she's got a couple other guys, yes, a couple other dates that are coming up. Knowing that information, this is what I took from it, because I align with it, is knowing that information. And that's what I'm trying in my initial conversations with clients. I'm trying to find out, is this even going to be a good fit? Sometimes I'll talk for 15 minutes and then I find out, well, I got to speak with my brother-in-law, who's also a mortgage broker. My dad told me I've got to talk to 10 people and he's got a guy. And I know immediately, and that's what I'm trying to get to, is this person, are they going to use me as a commodity? And I'm going to spend all this time, energy, and effort, my team's time, energy, and effort. Your way of going about it is more direct than how I do it. And I think, it's a smart way of doing it. Instead of, for me, I'm kind of analyzing based off of what they're talking about and trying to pull it out of them instead of just directly asking. I could probably save some time on my conversations just by coming out of the gate and asking.
Well, you ask after you've established unprecedented value.
Yeah,
right?
yeah,
You don't even
yes,
have the right to ask before that. But
right.
You're also using guilt as your friend.
Yes. Yeah.
Because ultimately, the way I set that up is that I'm going to, in a very subtle way, make you feel guilty. I'm going to make you feel like a schmuck for cheating on me, to use your analogy of dating. It's like, wait a minute, I asked you if you wanted to go steady with me. Yep. You said yes. Now you want to cheat. Right? Yes. Hold on a second. Like, it's going to really, on a psychological level, appeal to the person's values and virtues in that moment. And that's why they backpedal and go, oh, no, I'm sorry. A lot of times I would get, I'm sorry, like an apology. Okay. I'm like, hey, don't worry. I've got you. Like, this is the first of many loans we're going to do together. I'm going to add so much value to you over the next decade that this is just a footnote, this, $27 a month after tax or whatever the case may be. All right. Last question on a business level, and then I have a personal question. I'm intrigued by the not a good fit. Back to realtors for a minute. Like, I think this is a very important thing for people to hear because it took me, I kind of beat my head against a wall, bro, for like 8-9 years of, you got realtor on your business card. I want to date you, right? Versus like, wait a minute, like, not everybody's attractive, okay? And it's my job to learn about them. So tell us a little bit about the not a good fit, how you suss that out. What does that meeting look like when you're uncovering whether this person and you are meant to be working together? And what lessons have you learned?
I think it all comes down to whether they have unrealistic expectations or not. And I think that they've got to respect you. And for me, in the beginning, and this is what's tough for any loan officers that are listening to this that may be new to the business, a year, 2 years, 3 years in, is you are grinding to try to get as many loans, as many opportunities as you can. But what will wear you down and stop you from growth is if you put all your eggs in baskets with referral partners that have unrealistic expectations. And the majority of that is around, like, as an example, you've got a realtor who feels like if they're calling you at 10 o'clock at night and you're not answering, they're calling their next guy. That's not a partnership. You're the same as the client, rate shopping. You're a commodity. You don't really truly value me as a person or as a partner. So that's what I learned quickly is agents where if somehow I'm not, and I respond about as fast as anybody does, if I'm not responding quick enough, they're moving to the next person or they're expecting me to do stuff at on weekends or at a time of the night or in the morning. That's just not realistic. And that's how they run their business, is everybody needs to abide by exactly what they're needing. Now, I've got agents that I've worked with for 5 years that all of a sudden it's a Saturday night at 9 p.m. and it just so happens that a client found a deal and offers are due at 9 a.m. the next morning. We've got to work it out. And when it's a true partnership, you have no problem doing that for someone because they're not doing that every single time. And there's agents that run their business and it's haphazard. And that's why you're getting the calls at odd hours or getting odd requests, last minute pre-approvals that they've got to have in 2 hours. So that's the stuff that I monitor. And I wish I had better scripts for you, Tim. A lot of it is just more of me naturally figuring out as I'm having conversations with people and saying, hey, tell me about your business. What are your goals? You start to learn when you ask questions and you're really trying to find out about someone and how they run their business and who they are very quickly with how they're explaining, their personal life or how they run their business. And I look for red flags. And it's not that I'll have a coffee with someone and think, oh man, I bet they're tough and they're going to ask me to do stuff that's, not realistic. I give them a shot at it. But as soon as I realize this is going to be an unrealistic, expectation type relationship, I back off of it and I don't follow up. Of course, if they're sending me a deal, I try to do the best that I can, but I'm not pursuing that relationship anymore. This business will drive you insane, especially when you do a lot of volume and have a lot of people that are sending you business. If you don't try to keep your sanity and do things that you enjoy and be around people that you enjoy on a day-to-day basis. And I think you said this earlier, Tim, of like finding people like-minded and, have the same hobbies. It makes life more enjoyable if I'm working with a realtor and I get to go play golf with them and I truly like them and we're able to talk business while we're playing golf. So I think that's what people really need to zone in on, is if every referral partner you have is making you do, short timelines and needs everything right this second, you're going to burn out quickly, and you need to figure out how to get out of that and search and work with people who are going to be realistic on their expectations.
Yeah, very well articulated. I think that for most people, including me, when I was a young originator, when you come from a scarcity mindset, like I don't have enough referral partners, that's when you're very prone to subjecting yourself to dysfunctional relationships. And it's kind of like what comes first, the cart or the horse, right? And I know that it can be very difficult for a newer originator to wrap their heads around saying, well, but that's easy for Matt to say because he has 100 realtors, so he can afford to like pitch some of them to the curb. But actually, it actually works in the opposite way, because at the end of the day, the relationship that you have with yourself is the most important relationship. And if you're allowing yourself to consistently engage in relationships with people that are a hot mess and that are draining your vital life force from you, you're going to have a very difficult time being effective at point of sale with your clients, being a good team leader, being good when you get home with your family. I mean, there's a huge trickle down effect to all of it. So last question. Personal question. I like to ask this of every guest at the end. If you could turn back the clock to your 18-year-old self, and present day Matt could have a conversation with 18-year-old Matt, what wisdom would you share with him?
I would tell 18-year-old Matt to zone in on discipline. And I think that's something that I've learned over the years is how important it is to, for me, get up and read in the morning, make sure that I'm exercising 5 days a week. 18-year-old Matt was just kind of running through life haphazardly. And I think instilling discipline as early in life as possible, it'll create success on its own.
Great answer, man. Matt Kuglin, thank you so much for bringing your presence, your wisdom. I know this is going to be a really well-received episode, and I'm really grateful for your time, bro.
Hey, man, I'm so thankful for you. I appreciate the time. This was a blast.
Yeah, thank you. And thank to all of you who listened to this episode of the 360 Experience podcast with Matt Kuglin, and we'll see you in a couple of weeks with another guest. Have a great day, everybody.